Welcome to this week's roundup of key business developments in Sri Lanka. I'm Nishani Pigera, and here are this week's headlines. Sri Lanka presents a 79th budget with key tax reforms and investment push. Manufacturing and services sectors maintain growth. And Adani resumes talks on Sri Lanka wind power project after withdrawal. In our main story this week, on Monday, President Anurukumara Dissanayake presented the country's 79th national budget, targeting a revenue of 4.99 trillion rupees in 2025. The revenue to GDP ratio is set to rise to 15.1% from last year's 13.6%. Tax measures include higher vehicle duties, a 15% tax on service exports, and an 18% VAT on digital services. Taxes on alcohol, tobacco, and gaming will increase, while payee tax cuts aim to boost consumer spending. Government expenditure is set to rise to 21.8% of GDP, with public investment increasing from 2.7% to 4%. The focus is on reviving stalled infrastructure projects to drive growth. Recurrent spending will increase by 546 billion rupees, largely due to higher salaries, pensions, and welfare programs. The budget forecasts a primary surplus of 2.3% of GDP in 2025, slightly up from the 2.2% in 2024. The deficit is estimated to narrow to 6.7%, with 97% of financing sourced from non-banking borrowings. A key note is a reduction of pay taxes, with the tax-free threshold rising to 150,000 rupees, as well as the first band of the personal income tax, taxed at 6%, to be doubled to 1 million rupees. While there was a general optimism of the budget, Moody's rating said that Sri Lanka's forecasted budget expenditure for 2025 will likely lead to a wider fiscal deficit and slower than expected fiscal consolidation. Sri Lanka's manufacturing PMI rose to 59 in January 2025, reflecting continued sector expansion led by textiles, apparel, and food and beverages. Increased new orders, production, and employment drove growth, with supply delivery times lengthening. The outlook remains optimistic. The services PMI reached 58.5, signaling steady growth, though at a lower pace. Financial services expanded with increased lending, while tourism boosted hospitality. Transport, education, and professional services also improved. New business activity grew, employment rose, and work backlogs declined. Businesses remain optimistic, expecting further growth in the coming months. Just days after announcing its exit from a major wind energy project in Sri Lanka, Adani Group executives are set to reopen talks with the government next week. The discussions aim to revive two stalled 484-megawatt wind farms in Mannar and Punareen, initially valued at $442 million. Adani withdrew, citing tariff disputes and regulatory delays, despite securing approvals for a 20-year power purchase agreement. Further, the government was keen to renegotiate the tariffs to under 6 US cents per kilowatt from the current 8.26. Adani's exit follows a similar move by Australia's United Petroleum in December. With fresh negotiations underway, both parties are expected to address pricing and environmental hurdles. Sri Lanka's inflation is expected to rise sharply, nearing 5% by the third quarter of 2025, driven by unfavorable base effects, higher global food prices, and demand pressures, the Central Bank of Sri Lanka reported. However, the surge is likely temporary, with inflation projected to stabilize around 5%, targeted by mid-2026, supported by policy measures. Sri Lanka's apparel export revenue growth is expected to remain subdued in 2025 due to intense price competition despite higher export volumes, Johan Lawrence, Secretary General of the Joint Apparel Association Forum, stated. He added that manufacturers would face pressure to lower prices, with buyers demanding cheaper rates. While export volumes may rise, revenue growth will lag as countries like Bangladesh offer more competitive pricing. Lawrence emphasized consolidation over expansion in 2024, citing global uncertainties like the US-Canada-China tariff war, which could dampen demand. In this week's tourism update, in the first 16 days of February, Sri Lanka welcomed over 141,000 visitors, bringing the year-to-date total to over 394,000. Daily arrivals were 8,863, exceeding last year's figure of 8,282 during the same period. India remains the largest source market in the month, followed by Russia and the United Kingdom. The SRTDA has set an ambitious target of 310,937 visitors for February. The all-share price index at the Colombo Stock Exchange gained lost territory this week, with investors welcoming the presented budget policies. However, turnover remains subdued, significantly lower than the 8 billion rupees recorded in early 2025. At the Treasury bill auction held on Wednesday, yields on all maturities fell for the 11th week. Bids amounting to 273 billion rupees were received, of which 115 billion were accepted. And that concludes our update for this week. For the latest on economic and business developments in Sri Lanka, do subscribe to our YouTube channel on the link below. We'll be back next week with more insights. Thank you for tuning in. Stay safe.